Everyone, welcome back to AM Trading Tips. In today's video, I'm going to explain how my IPT Strategy EA works, what kind of logic it follows, and how it performed in a historical backtest. This video is created purely for educational purposes. There are no profit guarantees here, and nothing in this video should be considered financial advice. The goal is simply to help you understand how a professional automated trading system is designed and evaluated. The IPT Strategy EA is built on a concept known as the Institutional Pullback Trap. In simple terms, this logic focuses on trend continuation rather than reversals. Strong trends often continue after price pulls back and traps traders who believe the trend is ending. Instead of chasing price or entering late, this EA waits patiently for price to return to a value zone defined by the 50 exponential moving average, and then looks for signs that institutions are defending that trend. The strategy only allows trades when three very specific market conditions are aligned. First, there must be a clear directional trend. The 50 EMA must be sloping upward for buy trades or sloping downward for sell trades. This ensures that the EA is always trading in the direction of market strength and not against it. Second, price must pull back into the EMA value zone. This pullback represents a temporary pause in the trend, not a reversal. Many traders panic during these pullbacks, but the strategy treats them as potential opportunities rather than threats. Third, there must be a confirmation candle. This candle must wick into the EMA zone, but close outside of it. This price behavior shows rejection of that level and confirms that the pullback was likely a trap rather than a true trend change. Only when all three of these conditions are satisfied does the EA allow a trade to be placed. When a valid setup appears, the EA uses what is called split execution mode. Instead of opening just one position, the EA opens two positions at the same time. The first position targets a conservative profit level set at 2 times the initial risk. This helps secure profits earlier and reduces psychological pressure. The second position targets a larger move, set at 3 times the risk, allowing the system to benefit if the trend continues strongly. Both positions share the same stop loss, which is not a fixed pip value. The stop loss is calculated structurally using recent swing highs or swing lows based on a 20-bar look back. This gives trades enough space to breathe while still protecting the account from excessive loss. Risk management is fully automated in this EA. The lot size is calculated automatically based on your account balance and the risk percentage you choose. This removes emotional decision-making and ensures consistent risk across trades. There is also a built-in safety cooldown feature. After a trade is placed, the EA pauses for a fixed number of candles. This prevents overtrading during volatile periods and allows the market to stabilize before the next potential entry. On the chart, you can see a professional dashboard displayed in the top left corner. This dashboard shows your account balance, the current floating profit or loss, and the current status of the strategy. When the dashboard shows that the market is being scanned, the EA is active and waiting patiently. When it shows that a trade is active, positions are currently open and being managed. When you see a safety cooldown message, the EA is intentionally paused as part of its protection logic. Now that you understand how the strategy works, let's look at the backtest results you're seeing on the screen. This backtest was conducted on Euro-USD on the 1-hour time frame, covering the period from July 1st, 2005 to January 15th, 2006, using 100% modeling quality. One very important detail I want you to notice is the starting balance. I intentionally tested this EA on a small $100 account. The reason for this is simple. Many traders begin with small accounts, and I wanted to see how the strategy behaves under realistic limitations. As you can see on the screen, the initial balance was $100, and the total net profit generated during this test was approximately $331. This means the account grew to over $430 during the test period. This growth did not come from aggressive lot sizing or risky behavior. It came from structured entries, controlled risk, and disciplined execution. During this period, the EA executed around 170 trades. This tells us that the strategy is active but not overtrading. It waits for proper conditions rather than entering the market randomly. You will also notice periods of drawdown, and this is completely normal. Every real trading system experiences drawdown, especially trend-based strategies. Drawdown is not a flaw. It is part of the process and must always be evaluated alongside risk management. It is very important to understand that this backtest does not guarantee future performance. Backtests only show how a strategy behaved in historical market conditions. Live markets can behave differently, which is why testing on a demo account before using any EA on a live account is always recommended. If you are someone who prefers rule-based trading, understands that drawdowns are part of the trading journey, and wants a system that focuses on risk control rather than gambling, then this EA may be worth exploring further. If you would like to learn more about the IPT Strategy EA, I have added the official link in the video description. Please make sure you read all the details carefully, test the EA on a demo account first, and always use proper risk management. Trading involves risk, and no system can eliminate that risk completely. I made this video to help you understand how an automated trading strategy works, how to evaluate backtest results properly, and how risk management plays a crucial role in long-term consistency. Thank you for watching AM Trading Tips. If you found this video helpful, feel free to like the video and subscribe to the channel for more educational trading content. I'll see you in the next video.